Good evening, all of you. In this video class, I'm going to take you to the second method of depreciation, that is diminishing balance. Okay, this is the second method that we come across, and this method is also known as reducing balance method, or reducing installment method, or written down value method. And what we will come across in this method, when we go for the first method, the depreciation, whatever we calculated in the first year, it will be taken up to the last year, that is up to the useful life of the asset. When we go for the same amount of depreciation, automatically at the end of the life of the asset, the value of the asset will become zero. And people, they used to go for replacement of the asset, okay, after the completion of the useful life of the asset. But in this method, it is not like that. The life of the asset, okay, they will take into account, and the method of depreciation, it is entirely different in this method. So, what is this? Whatever it may be, the second year balance, second year beginning cost, on that only the depreciation they used to charge. When they are used to charge depreciation like this, automatically the depreciation amount is going to reduce from a higher value to lower value. Okay, thereby at the end of the life of the asset, some value will be in that asset. Okay, so this method is generally followed by some business people. Okay, and most commonly the tax authorities, they used to follow this method. Okay, because I mean, they don't want to allow the organization or the businessman to go for replacement of the asset in a very early stage. See, they want to see what is the asset value, whether asset value is there or not at the end of the useful life of the asset. They used to see that, and if there is any value in the asset, okay, those people, they used to restrict the business people or the organizations not to go for replacement of the asset as early as possible. Okay, so this is the thing that we come across. And in this context, I'm going to give an example. Okay, suppose if you take into account an asset value as 1 lakh rupees on the beginning of the year, that is, say, for example, 1 4 2019. The financial year, it ends by 31st March 2020. So when we go for this 1 4 2019, and the year ending is 31st March. Okay, when you go for this on 1 lakh rupees, say for example, if the depreciation rate of depreciation is 10%, and we have to do the problem on diminishing balance method. On 1 lakh rupees, if you calculate 10%, it comes to 10,000 rupees. So that 10,000 rupees they used to deduct from this 1 lakh rupees. So they used to come 90,000 at the beginning of the second year. And at the end of the second year, at the end of the second year, okay, again they used to calculate depreciation not on 1 lakh rupees, not on 1 lakh rupees. They used to calculate depreciation on 90,000 rupees, 10%. So when you calculate, automatically the depreciation amount comes to 9,000 rupees. Like this, okay, like this, they used to calculate and they used to do the problem. So whenever you come across the depreciation amount from the first stage to last stage, it used to reduce or it used to decrease 10,000, 9,000, 8,000, 7,000, 6,000, 5,000, like that. Okay, and at the end of the year, automatically you'll come across a value in the asset. And this method is most commonly used by the tax authorities. Okay, this is the explanation. And here, The rate of depreciation, how they will calculate? The rate of depreciation is equal to 1 minus nth root of scrap value by cost of the asset into 100. And this thing, every year they have to calculate the rate of depreciation. So whenever they used to calculate for every year, automatically there will be a change in the depreciation rate. And according to the depreciation rate only, they used to calculate the depreciation amount. Thereby, at the end of the life of the asset, okay, some amount will be in the asset. You will come across the asset having some value with it, not like that of first fixed installment method. And this is okay. Some people only they will give preference for this, and some people they won't. Okay, and whenever you go for this tax authorities, compulsory the tax authorities they used to give importance for this second method only. Okay, they don't want to go for any other method except the second method only. Like this, they used to go for this. Okay, now when we are going for that, when we are following this thing, okay, what is the advantage that we come across and what are the disadvantages that we come across? The advantage is the total burden on the profit and loss account in respect of depreciation and repairs, okay, of an asset is more or less uniform every year. So whatever it may be the depreciation amount and whatever it may be the repairs amount, they are more or less same, uniform every year. And one thing you have to observe here is the amount of depreciation it will be very high in the beginning. It will be very high in the it is more in the beginning. Very high in the sense very more in the beginning. And gradually it used to decrease. And when you go for repairs, when you go for repairs, the amount of repairs, the cost of repairs, okay, it will be very less in the beginning and gradually it used to increase because by continuous usage of the asset, automatically what will happen is it will go for repairs. So thereby the amount or the cost for repairs it is more comparative to depreciation amount. Depreciation amount in the beginning it is very it will be very high and gradually it is going to decrease. This is the thing that we come across. Thereby, there won't be any burden for the profit and loss account. Okay. Thereby, there won't be any, burden for the profit and loss account as well. For the organizer or the businessman. The second one is there is no need of fresh calculation in case there is an addition, okay, to the asset, unless each unless such addition is made in the middle of the year. So when you are having one asset and when you are calculating depreciation by second method, that is letting but diminishing balance method, then what happened is, okay, whatever it may be the asset that you are having, you are going to calculate in the same manner, in a decreasing manner. So thereby there won't be any problem. There won't be any calculations, further calculations or recalculations. But whenever you come across any additional asset in the middle of the year, okay, then we have to think about the calculations. So as far as possible, whenever you come across the asset and when there are no additions to the asset, then the calculation of depreciation it will be very easy. That is the second advantage that we come across. Okay, where there is good, there will be bad. In the same way, whenever you come across advantages, you will also have some disadvantages. What are the disadvantages that we come across? Okay, the first disadvantage is the asset value, it won't become zero. See the peculiarity. The asset value, It won't become zero at the end of the useful life of the asset, because the depreciation, it is reducing day by day, year by year. When it is reducing year by year, automatically the value of the asset you will come across, or the cost of the asset you will come across in that asset. Okay, it won't follow the first method, that is fixed installment method, because their same amount of depreciation they used to consider. But here it is not like that. According to the cost of the asset of every year, they used to calculate the depreciation. And when you observe the depreciation amount, it will be very high, or it will be very more in the beginning, and gradually it comes down. So thereby, what will happen is you will come across some value in the asset. Okay, it won't become zero as and when we wish. That is the first disadvantage that we come across. The second advantage is, okay, ignores the reward on the investment made on the asset. You see, a businessman, when he want to purchase an asset, it means nothing but is making some investment. Is making some investment on the asset. So here you won't come across any reward. Suppose if he make an investment outside, he will get some reward in the form of interest. But that interest you won't come across in this method. That is the biggest disadvantage or drawback for a businessman or an organization. And the third one is, okay, simplicity. It it lacks simplicity. It don't have any simple way, because the fact is the rate of depreciation you have to calculate every year, and some people they can able to calculate, and some people they cannot able to calculate. Okay, it is not as simple as the first installment fixed installment method. It is very cumbersome and very complicated when we go for this method, because the rate of interest, it won't be uniform, please. Okay, every year you have to apply the same formula as what I have told. Rate of depreciation is equal to 1 minus nth root of scrap value by cost of assets into 100. Here n refers to the number of years. How many years that asset will stay. So that years you have to take. So n represents the number of years. So every year you have to calculate. Every year you have must calculate. When you are calculating every year, automatically the depreciation will come down, no doubt. That is okay, different. But thing is, every year when you want to calculate some, it becomes some problem for the business people, okay, to calculate the rate of depreciation every year when they are following this method. So it lacks simplicity. It lacks simplicity. And where this method is useful, when you take a plant and machinery and when you won't come across repairs regularly, then this method is the best suitable method. When you are when you purchase a plant and machinery, and that plant and machinery when it doesn't require any repairs, then this method is the best method, and it is suitable for that. It is suitable for that. Okay, that's why most of the people what they will do is, okay, they won't go for this method. Array, it is very shocking method. People they'll think that it is nothing but a shocking method. So like that, the business people they won't touch this. But thing is, okay, income tax authorities they have to and they must go for this. And now we are going for some journal entries. Okay, don't be of that opinion that we won't come across any journal entries. We'll come across some journal entries. So, what are the journal entries? Where we have to, prepare the journal entries. At the in the end of the first year, when you are purchasing an asset, okay, the entry is asset account data to bank account, because we are getting the asset and money is going away. So asset account data to bank account. That is the first entry. The second entry is when we are going for erection charges or installation charges, okay, or overhauling charges, whatever it may be, all these charges you have to transfer to the asset only, because for the asset only, the installation and erection or overhauling charges you will come across. It is not for some other asset. For the machinery, for the asset only, it will come. So naturally, you have to take that into the asset account. That is, you have to transfer that to the asset account. Then the second entry will be asset account data to bank account, same as the first account entry. Okay, this is the thing. Then how to charge the depreciation? When you are charging depreciation, how to show that? So the third entry is depreciation account data to asset account. Depreciation account data to asset account. So when we are charging depreciation on the asset, that is the third entry. Now coming to the fourth entry, this depreciation I told you already earlier that it is nothing but a charged loss. So when it is a charged loss, compulsory you have to transfer to profit and loss account. So what is the entry? Profit and loss account data to depreciation account. Profit and loss account data to depreciation account. We have to transfer the depreciation amount to profit and loss account. Thereby, we can able to know the net profit amount correctly. These are the four entries that we come across at the end of the first year. And in subsequent years, that is from second year, third year, fourth year, okay, in subsequent years, there is no necessity for you to prepare the four entries, please. Only two entries. That is the third entry and the fourth entry you have to pass. First, depreciation account data to asset account. Next, profit and loss account data to depreciation account. That's all. Only two entries will appear. Okay, in second year, third year, fourth year, like that. Now, whenever an asset is sold, okay, then what is the entry? Along with third and fourth entry, you will come across this entry also. Bank account data to asset account. Bank account data to asset account. Okay, when you are selling the asset in the market. Then, if you come across any loss, if you come across any loss, whatever it may be the loss, it is compulsory that you have to transfer to profit and loss account. So what is the entry? Profit and loss account data to asset account. Profit and loss account data to asset account. Like that you have to transfer. And you may ask me, sir, sometimes if we get profit, the above entry will be reversed, like asset account data to profit and loss when you come across profit. So like this, you'll come across. And yeah, profit or loss when you come across. When you take the book value of the asset as well as the sale value of the asset, then only you'll come to know about loss or profit on sale of the asset. You see, sir, what is the book value? After reducing the depreciation amount, whatever it may be, the value that we come across, we'll call that thing as book value. And sale value, at what value you are selling, at what amount you are selling that. In this context, I'm going to give you an example. Suppose if the book value of the asset is 20,000 rupees, and if you are selling for 15,000 rupees, there you got a loss of 5,000 rupees because the book value is more and the sale value is less. So there you are getting 5,000 rupees loss. This is regarding loss on sale of asset. Now coming to profit on sale of asset. When the book value is 20,000 and when you are selling at 30,000 rupees there, you are getting a profit of 10,000 rupees because the book value is less than the sale value. So in that case, automatically you are going to get profit on sale of asset. Like this, you'll come across about the reducing balance method or diminishing balance method or written down value method. After this, we are going to continue for the third method. Thank you.